Hey guys, welcome back to the channel. Today we are looking at Rolls-Royce Holdings. It is one of the United Kingdom's most strategically important industrial companies. Now, it is an FTSE 100 stock. It sits at the crossroads of aviation, defense, energy, and emerging technologies. And over recent years, the business has actually undergone a dramatic transformation, including the stock price. Moving from the period defined by engine issues, collapsing flying hours, and heavy R&D spending into a new era of stability and profitability. Now, of course, please do your own research. I'm not a financial advisor, so you can lose money while investing. So it's always important to do your own research. So Rolls-Royce trades under the ticker RR, and it commands a market cap of exceeding £100 billion. Now, it operates across four major divisions: Civil Aerospace, Defense, Power Systems, and New Market. Now, each division contributes differently to revenue, risk, and long-term growth potential. Now, of course, the company is led by CEO Tufin Uruk Biligex. Probably said that wrong, but his turnaround strategy has helped reshape the organization's cost structure, culture, and financial performance. Now, of course, as you can see, year to date it's actually up nearly 20%. Year ago it's up by 40%, but 5 years ago it's actually up by 1.33k. Now, you could have actually got a share for I think it was like 50 GPX. Now, and if the stock price now is at 1,386, you can see how much money people would have made off that trade if you'd done it 5 years ago. But like I say, people can't see in the future, so it's always a risk to do so. So never always invest blindly. But the stock was heavily beaten down, so it's good to see the stock up and doing well that it should do. It also pays a dividend as well now at 0.68%, but we will get to that at some point. Now, of course, what does someone who's trying to invest in this stock would look like? So what's their investment thesis? Now, of course, the core investment thesis on Rolls-Royce is about how the transition from a turnaround story into a cash-generating compounder. Now, the business benefits from a long-term structural trend like overall aviation growth, defense modernization, data centers, and a global push towards decarbonisation. Now, of course, you need to have a look at see the high margin service contracts, which will create the recurring revenue, the defense and the power systems, which provide diversification, stability, how well they doing, and of course, keep improving on the balance sheet and see how the free cash flow is going to be going. Because these create a foundation that helps support reinvestment, debt reduction, and eventually growing the dividends even more. Now, we have gone briefly over what Rolls-Royce does, but we'll go into a little bit more detail of each sector. Now, of course, they do fundamentally do power and a propulsion, but they do other categories. Like I say, Civil Aerospace, which, if you don't already know, it designs, manufactures, and services long and large aircraft engines for wide-body jets such as the Airbus A350, the Boeing 787. So these engines operate for extremely long periods and deeply integrated into airline operations. They do the defense, where they provide propulsion systems for military aircraft, naval vessels, nuclear submarines, including some that you may already know, like the Eurofighter, the Typhoons, the B-52s. So pretty much they have exposure into defense. They also have power systems, so the trains that we use, especially I think it's the Avanti trains, the intercity ones, through the MTU brand. So they supply industrial engines, energy solutions for data centers, marine vessels, rail networks, and backup power systems. And they also do new markets, which is basically focus on future technology like small modular reactors, electric aviation, and hydrogen combustion engines, so like electric cars and stuff like that as well. So Rolls-Royce makes its money very well with its revenue model, which is unique. Now, engine sales often generate low margins or even losses, and the real profitability comes later through the long-term service agreements. When Rolls-Royce sells an engine, it typically signs a multi-decade contract covering maintenance, repair, overhaul, and flying hour payments. So every year and every decade, they sign all these agreements because every hour the engine's in the sky, it generates the revenue. So this creates a powerful recurring revenue that will last for the decades it's signed. Defense contracts also add stability, while power systems provide diversification into industries like less cyclical than aviation. So, like I say, the civil aviation is Rolls-Royce's largest division, and is the most sensitive to global travel trends. The company dominates wide-body engine markets, powering aircraft that fly long-haul international routes. The long-term service agreements lock airlines into Rolls-Royce for decades, and as flying hours continue to recover and surpass pre-pandemic levels, the cash flow generated from these contracts grows steadily. They also have the defense segment, which is providing the propulsion systems, like we've mentioned, into the important military platforms. The engines that power the Eurofighter Typhoon and support the B-52 re-engine program, but they also provide the nuclear propulsion for the submarines. Now, this is categorized by highly predictable revenue because government contracts have low default risk, and the strategic importance of Rolls-Royce technology makes it difficult to replace. They also have, like let's say, the power systems, which are one of the most diversified divisions in its stock. Through the MTU branded engines, the company serves data centers, marine vessels, the rail networks, and the backup power systems. The rise of AI, cloud computing, and hyperscale data centers is driving a strong demand for reliable, high-performance industrial engines, which Rolls-Royce do. So this segment offers strong margins and a broad customer base, and Rolls-Royce is extremely good with that, especially with the strong margins and the growing demand. But they also are investing heavily in the future technologies, with the small modular reactors that could come multi-decade revenue streams if improved, but also the electric aviation that aligns with the global decarbonisation goals, and the hydrogen combustion engines that represent a potential future for zero-emission propulsion. Now, these projects are early stage, but positions Rolls-Royce at the forefront of the next generation engine and aviation innovation. But let's have a look at the revenue breakdown. Now, of course, civil aerospace contributes more than half of the total revenue. Defense accounts roughly for a quarter, and the power system adds roughly around 20%. Now, this mix provides both growth potential but stability. And as you can see, the revenue from 2024 was about 9,000 or 9 million, and it's now in 2025 at 10 billion pounds, which is really good indeed for civil aerospace. As you can see, power systems have also grown, and defence have also grown indeed as well. So you're looking at a good growth there. About an 8% change to a 19% change and 15% respectively. But also, where is the free cash flow in this and why it matters? Now, of course, free cash flow is critical for dividends, debt reduction, and reinvestment. Now, Rolls-Royce has historically struggled with free cash flow due to the engine issues, the collapse in flying hours during the pandemic, but also the heavy R&D spending. But today, the company is entering a period of predictable recurring free cash flow. The Civil Aerospace long-term service agreements, which provide visibility over the future cash generation, has started to come back due to flying hours that have recovered strongly, defence contracts that have offered a baseline stability, and the power systems that add diversification has also helped with that. Now, is it growing and generating predictable free cash flow? Well, in my period, it does, because it now benefits from the flying hours above 2019 levels, the multi-year visibility from service agreements, the stable defence income, but the management guidance also shows a clear trajectory of improving the free cash flow. And here it is. The company expects multi-year expansion in free cash flow driven by higher utilisation, improved margins, and disciplined capital allocation. But that's also because of the higher operating profit. And let's get into the dividend. Now, you may have known Rolls-Royce has only just came back with a dividend because it actually suspended it during the restructuring, but it reinstated it in May 2025. Future dividend growth will, of course, depend on the continued debt reduction, consistent free cash flow, and disciplined capital allocation, but it's quite good that the dividend is now back because at least it will be giving back 75% of free cash flow that will be returned to shareholders either through dividends or by buybacks. And the balance sheet is also strengthened too, and it made significant progress reducing the debt. And they're lowering the leverage too, which credit ratings outlooks have improved with that. The balance sheet is now far stronger than it ever was during the turnaround period. Because under the CEO, Rolls-Royce has undergone one of the most effective industrial turnarounds in recent UK corporate history. The strategy that focused on aggressive cost cutting, efficiency improvements, repricing service contracts, and shifting the company culture towards profitability over volume. But they also have a competitive position. Rolls-Royce dominates the wide-body market and competes primarily with GE or GE Aerospace and Pratt & Whitney. Its trend engines are known for high efficiency, strong reliability, and long service intervals. In defence, Rolls-Royce is irreplaceable. In certain propulsion systems, of course, and particularly the nuclear submarine engines. Now, of course, it has some tailwinds and it benefits from powerful long-term trends, like global aviation growth, fleet renewal cycles, rising defence spending, data center expansion, but also the decarbonisation and energy transition. But there is risks with it. Now, of course, we did mention what happened many years ago with Rolls-Royce making a 2.9 billion loss as engine faults cost nearly 790 million pounds. And this is one of the reasons why the stock got beaten down. Now, of course, touch wood, the stock isn't going to probably have one of these as big as it did, but there is still risk to the engines ever breaking or stuff happening with airline bankruptcies, because that is the key risks. It's technical issues, the airline bankruptcies, geopolitical tensions, but also if the competition from GE Pratt Whitney become better and stronger, it's when that happens is when people will get worried. Now, in my opinion, I do not think that's going to happen in the long term. I do think Rolls-Royce has cemented itself in the position that it has, and I don't think it's going to be easy to knock them out. Now, of course, it is a UK listed stock, and it provides FTSE 100 exposure with GPB denominated industrial asset. Now, of course, this is good because your diversification away from US tech heavy if you are investing in US stocks, and it is one of the most UK's most important industrial champions. And like many people say, the UK stock market is actually a lot cheaper than it is in America, so this is also another good reason. Now, of course, it does have long-term growth drivers. Now, the long-term growth will be driven by the aviation recovery and expansion, but also the systems from data centers, which will be quite good to see, especially with AI growing. That is something that I will be looking out for to see how much Rolls-Royce could go in and how much demand they're actually going to get from the AI and even data centers, and see if it actually is going to boost the revenue stream as much as people say they will. So, why is, in my opinion, Rolls-Royce a strong portfolio add? Well, it's involved into a high margin cash generational stock. Its business model is built on long-term service agreements, predictable flying hours revenue, but also the strong defence contracts that provide stability. With the civil aerospace margins that have expanded dramatically, the balance sheet strengthening with free cash flow that's rising sharply, but management that's also executed a disciplined operational transformation. With exposure to aviation recovery and defence modernisation, Rolls-Royce is positioned for multi-year expansion. But also as a UK listed stock, it helps me, get exposure into the UK market. But also the fact that when the dividends come, I'm getting no tax on it as well because I am from the UK. So for me, Rolls-Royce is definitely going to be one to add into portfolio. Now, of course, I'm not quite sure how much I'll add to it, but this is definitely a stock that I'm looking at as well. And if you are one of those people that have also added Rolls-Royce in the past or have them in my portfolio, comment down below, let me know how much you've actually got in it or if you've got it added in your portfolio. Leave a like if you enjoyed, and if you haven't subscribed already, hit the subscribe button, and I'll see you on the next one. Goodbye.